Welcome back, and joining us on the show now is Saif Mukadam. He's research analyst at ICICI Securities. Saif, hi, good to have you. And what a day this is. The last 24 hours clearly have told you that while the risky assets have continued to decline, the gold and silver prices only continue to trade on a firmer note. Even in today's market, 1850 plus kind of levels in the global markets, and the rupee depreciation seems to be handling or rather supporting the Indian calculations as well. So I'll start with gold with you. And what's your sense outlook for this year now?
Yeah, hi. Thank you for inviting. Happy New Year to all viewers. We expect gold prices to rally till 62,000 this year. There are various factors will be supportive for the gold prices, but more focus will be on the Fed rate path, interest rate path. If we see from past few months, the inflation numbers are coming down in US. Secondly, if you see any data, key economic data like manufacturing data or housing data, it's feeling the heat of rate hike. So we see Fed to pause its interest rate hike by early in this year and may even cut down rates by the end of the year. Even the dollar is losing its steam and yields are tumbling down, so that will be supportive for the gold prices. Demand for the safe haven will also be rising due to global economic slowdown and geopolitical tensions. So from here, we expect gold prices to rally till 62,000.
Saif, while gold has continued to gain, silver clearly outperforming, and silver also being an industrial metal has much more working in its favor. Are you also expecting newer highs for silver in this year?
Yeah, hi. Even yes, we are expecting silver prices to outperform gold, and we are expecting silver prices to go till 80,000. As we see, the market is expected to remain in deficit for a second consecutive year. We are seeing that demand for silver is being seen across the segment. Demand in the industrial segment is expected to rise due to electrification of vehicles, say 5G technology, or commitments to green infrastructure. Even the demand for the investment will kick in due to recessionary fears. So we expect silver prices to outperform gold and rally till 80,000.
All right. While of course we do understand that the cabinet is looking at green hydrogen as an approval there, and that's exactly what various countries are talking about now. Climate control and renewables, 5G, green infrastructure is something that is on cards right now. What is the impact of all of that you see on fossil fuels like crude and gas prices? What is your expectation, or where are we moving in prices for those?
Okay, on crude, we are expecting crude oil prices to go till 78.50 on MCX, and internationally, we are expecting it to go till $95 per barrel. That is because of the tighter oil market is expected in the future, and even the demand from China is expected to recover.
Okay.
The OPEC has already decided to cut down its oil production by 2 million barrels per day, and even Russian oil production is expected to go down. So this will be some positive factors for the crude oil to rally till $95 and on MCX till 78.50.
Well, that's about the energy space, but I also want to talk about the metals as a sector, Saif, because the previous year saw all-time highs, multi-year highs. Metals as a sector for equity markets also has been one of the best performers there. We've started this year on a very choppy note, dollar on one side and the expectation of Chinese demand on the other. What are the factors you're looking at, and any topics that you have in metals therein?
Yeah, sure. Copper, we are expecting it to go till 850 again on MCX due to the supply concerns from Chile and Peru. Secondly, your weakness in dollar will be supportive. Stockpiles are depleting on LME registered warehouses. Secondly, China, if you see that China has already started loosening its COVID restrictions, so that will raise the hopes for economic recovery. And China has also taken some steps to revive its property sector. So this all factors will be pretty positive for the copper. Aluminium side, if you see aluminium prices, we are expecting it to go till 260. That is due to the soaring energy prices, the Europe has cut down its aluminium production. So that will be again supportive for the prices. Even the stocks are depleting in aluminium. Stocks are depleting at the LME registered warehouses. So that will be supportive. On lead and zinc, we are expecting lead to rise till 200 and zinc till 350 on MCX. That is majorly the market is expected to remain in deficit, and the LME registered warehouses, the inventories at LME registered warehouses are also depleting. So these are the major factors that will be supporting the base metal prices.
Saif, in all that you said, there are 2 or 3 things that the markets will watch, keep an eye on rather. One is the dollar index, the moves therein. The Chinese demand is the second thing. And the third clearly is about the interest rate hikes or the peaking of it that we may see ahead. What's your sense on what is going to be the more important factor to keep an eye on?
Major factor is like Fed will pause its rate hike. So it's most probably it's expected to like peak at around 5%. So that is to be majorly focused on, and that will lead to the weakness in the dollar index, which has already started showing it's losing its steam. And so these are the major factors and the demand supply concerns which are going on, which is already mentioned for Chile and Peru for the base metals, for the copper. So, and depleting stockpiles again at LME registered warehouses. These are the major factors which will be impacting the base metals and even the crude oil prices.
Okay.
Okay, all right, Manisha. Thanks very much for taking us through that important piece of news. But we did have another important piece of news which was flashing on your screens, where the cabinet has approved the National Hydrogen Mission. We are awaiting more details on it, but just to give you a larger, broader context of this particular news, the mission, remember, aims to aid the government in meeting its climate targets, making India a green hydrogen hub. Its aim is to meet a target of production of 5 million tons of green hydrogen by 2030 and related developments as well in the renewable energy sector. We take a break and get you more on this piece of news as well as other stocks. Stay tuned.